On the same day that NIO released its earnings and its stock price crashed by 10%, Cathie Wood bought 8.4 million shares in the company, or nearly 1% of all NIO stock. Hello, my friends. Welcome to the channel. I'm the Electric Viking. Yes, I do actually have Viking ancestry. My uncle told me a story today about our ancestors in England. Their name started with an O. My mother's maiden name started with an O. And he said he went to England on a holiday to actually find out and learn about our Viking ancestry, which is quite interesting to hear. I'll share that story with you on another video. Welcome to all the new subscribers. Great to have you. Welcome back, everyone else. This is a fairly new channel, been around for still less than a year, but we have made more than 1,000 videos about electric vehicles, about battery technology, and about the automotive industry. What's going to happen in the future? What is the disruption going to be like? What's going to change? What's the world going to look like in a decade from now? So if you want to know more about that, make sure you subscribe, click on that notifications icon, and you'll find out about all the things that are happening in the world of electric cars. Now, over the past year, we've seen many investors ask Cathie Wood if she would buy NIO, and she hadn't done so until now. I personally bought NIO stock when it fell down to $13 on the 15th of March. I picked up the stock at about $14. It's since bounced up to $22, but now it has dropped down to $19. And obviously Cathie Wood decided now was the time to buy. And I mean, they didn't just buy a little bit, they bought quite a lot of NIO stock. Interesting to see. It was a bit of a surprise to me that NIO stock fell by nearly 10% on the same day that they reported their earnings, which were actually pretty good. ARK Invest, managed by Cathie Wood, bought 420,000 shares of NIO through its ARK Autonomous Tech and Robotics Exchange Traded Fund, or ARKQ, on Friday, worth about $8.4 million. And that represents 0.5% of the fund's total holdings. ARK Invest actually revealed the trade in a daily trade alert email, and its official website has not been updated with a change in ARKQ's holdings as of today. Now, why is this interesting? Well, ARK had already purchased a lot of shares in Tesla, sold a lot, purchased a lot, sold a lot, purchased a lot. They'd also already bought Xpeng and BYD, but they had yet to buy any stock of NIO. So it is interesting in the sense that this is the first time they've decided to buy NIO when they already held significant positions in those other electric vehicle companies. One interesting comment that Cathie Wood made that I don't think anyone's really talked about is a comment that she actually made in February of 2021 last year, when she said that NIO's battery swapping concept will win the day in China. Now, I want to point out to you that Cathie Wood's fund also bought Xpeng as its shares continued to fall late last year. They bought 928,648 shares of Xpeng, worth $27 million and 1.6.3% of their position. But interestingly, Xpeng stock has also fallen dramatically since Cathie Wood purchased the stock. And well, I tried to take advantage of this as much as I could. On the same day that all the Chinese EV makers' stock prices crashed, I bought some stock of Xpeng, and it's rebounded pretty significantly since I bought Xpeng stock. But still, NIO and Xpeng are currently very, very undervalued. Interestingly, right, ARK Invest sold 146,000 shares of Tesla on Friday worth about $147 million. So they essentially went from holding Tesla, selling some Tesla stock in order to buy NIO stock. I mean, that's not entirely the full picture, but clearly that's part of what actually happened. Now, to give you some context on NIO stock, on the 30th of June 2021, it hit $53. On the 15th of March, it fell to $14.93. Today, it's currently sitting at $21. And I still think it's basically a bargain, considering that the company has proven it can deliver large numbers of quality electric cars. I personally believe that NIO will deliver around 190,000 electric vehicles this year throughout Europe and China. But shares of NIO revalued lower after the Chinese electric vehicle company submitted its earnings for the final quarter of full year 2021 at the end of last week. The plunge occurred mainly due to NIO's first quarter 22 delivery forecast, which was considered weak. Longer term, however, NIO is going to ramp up production of their electric SUVs and sedan models aggressively, and the stock has a lot of potential to revalue much higher. I think it will likely double in value by the end of this year. In fact, that's my prediction and I'm sticking with it. In essence, this 10% drop just gives you an opportunity to buy in at a lower price. And it clearly shows that investors are a little bit too affected by short-term delivery forecasts. For example, clearly a lot of people just don't understand the reality of the Chinese car market. January and February are the two slowest months of the year. February is by far the worst month of the year every year for the last 20 years. And I think people just don't understand that fact. And they're going to be shocked and surprised by the actual deliveries that come by the end of the year. How many vehicles did they actually deliver this year? Well, NIO delivered a total of 15,780 EVs, mostly ES6s in January and February. This was largely because of Chinese holidays and a shorter trading month in February. February is normally probably 2.5 weeks of the month people actually trade. I believe that NIO will likely deliver an average of around 12 to 13,000 EVs per month for the rest of the year, averaged out between March to December. Let's have a quick look at NIO's deliveries in December of last year. Well, December of 2021, NIO delivered 10,490 electric cars, giving them a December year-on-year growth of 49.7%. In January, they delivered 9,652, giving them a year-on-year growth in January of 34%. NIO is saying that they will deliver between 25 and 26,000 electric vehicles in the first quarter of this year. That will be an increase of around about 25 to 30%, depending on the number, compared to the same quarter last year. So like I said, I believe NIO will deliver upwards of 190,000 electric vehicles this year. Realistically, NIO's stock price has made it look like the company isn't doing very well, like it's having massive troubles. But the reality is, it actually is. Vehicle sales surged 50% year over year to 9.22 billion Chinese yen in the fourth quarter, which calculates at 1.45 billion US dollars, while total revenues increased 50% year over year to 9.9 billion Chinese yen, which is 1.55 billion. In my view, what is more important than that though, and one of the reasons that NIO stands out against other rival electric car companies is their margins. Now, in spite of NIO's production and delivery ramp challenges and chip supply problems in 2021, vehicle margins are increasing quickly. In the fourth quarter of 2021, NIO's vehicle margins increased to 21%, adding 3.7 pp year over year, meaning NIO is becoming more profitable on a per vehicle production basis. That is the most important thing here. Profitability per vehicle. We don't know that Legacy Auto can actually make a single cent from the sales of their EVs yet. None of them have said that they can. We don't know if they can. It's really one of those guessing games, but we know that NIO will be able to do that. What does this mean? I believe this means that NIO will actually show a profit in 2023. NIO actually grew their deliveries by 110% for the full year of 2021 to 91,430 electric vehicles. And they've got significant momentum on their side for a few reasons. One of those, selling their vehicles in Europe. The second, new vehicles, both the ET5 and the ET7, which are coming this year in China. Now, the Asian investor, I'll put a link in the description below to his page, says that NIO's commercial prospects in the Chinese electric vehicle market are undervalued, and Friday's 10% drop in NIO's valuation is completely undeserved. He says NIO has become too cheap, especially considering that NIO traded at a much higher market capitalization to sales ratio in 2021. What are the risks with this company though? There are some. Well, NIO has short-term timeline and production risks. Computer chip supply issues affected factory output in the global auto industry in 2021. And they are still a risk for NIO and other electric vehicle manufacturers. But interestingly enough, Chinese EV manufacturers appear to not have been affected by chip supply shortages anywhere near as much as Legacy Auto or other car companies outside of China. NIO actually lowered its delivery forecast in 2021 due to a strained semiconductor supply situation. If the flow of computer chips, which are vital for EV production, gets disrupted even more, NIO may grow electric vehicle production and deliveries not as fast as anticipated, which could further add pressure on the firm's valuation. That's a possibility. Now, personally, I think the risk versus reward ratio is just skewed too heavily versus rewards. That's why I've invested in the company. The production outlook for NIO in the first quarter indicates a large rebound in March. And this, in my view, will definitely start to sway investors. If NIO actually does deliver 190,000 electric vehicles this year, that would mean year-on-year growth of 100%. And that is the kind of growth that causes disruption and obviously some measure of excitement for investors. Now, I've just had a quick look at tip ranks for the analyst price targets for NIO. 16 of 18 analysts say that NIO is a buy, 2 say it's a hold. The average price between those 18 analysts gives NIO a price of $45.50, which is well over double what it is today. Even if the stock doesn't come close to hitting that number, it could still potentially double in value. We only have to get to around 38 US dollars, which is still 7 US dollars below those analysts. In other words, it has huge upside. I just can't see NIO's stock price going down much more. It's already collapsed through the floor massively over the past 6 months. And realistically, the risk to reward ratio, like I said before, looks really heavily skewed toward reward. Now, this is just my personal opinion, which has led me to buy the stock. So obviously don't go and buy the stock just because I said so. Do your own research and then make your own decisions based on that research. But I mean, look, Cathie Wood agrees with me. Not saying she's God or anything. I mean, obviously she hasn't made all the right decisions in every instance, but she certainly has made some big plays. Even though in the last 6 months, obviously ARK Invest funds have dropped a lot, still they've done very well over the last 5 years. And it's a long-term here. We're investing for long-term growth here. Will NIO be a company that will still be around in 10 years? In my view, absolutely. Key point here that I can't emphasize enough is the reality that NIO is significantly improving its bottom line. In other words, it is going to be profitable on a per unit basis very soon. Why will it be profitable? Key thing is here, right? The market perceives NIO's vehicles as premium. Their average sales price is the highest of any vehicle manufacturer in China, right? Any mainstream vehicle manufacturer that's selling more than 1,000 vehicles a month, NIO is the highest average seller. So the market perceives NIO as premium. They have the ability to charge a premium price for their products, and that gives them the ability to make better margins than the competition. Thanks for watching. I'll see you again on the next one. Bye-bye.